I'm going to ask my friend Mary Ballard with Ballard Mortgage Team at Supreme Lending some questions about the interest rates. My name's Chris Williams with Remax Preferred of the Williams Group here in Fort Lauderdale. You guys who follow me may have seen some of my videos. I talk about interest rates, and I've done some blog articles on them and my impression of them, historical data, this, that, and other thing. And so my information comes from good sources, and one of the sources is actually Mary. So rather than have me give my take today, I think we'll just talk to Mary about interest rates. So, you know, I know our mortgage interest rates are really more tied to the long-term bond market,
yes,
mostly, versus
yes,
commercial loans that are more the Fed, overnight
yes,
rate, things like that.
Right.
So I've talked about that in previous things. But we're walking in the building today. We meet some of the owners in the building. We're at Sunrise East, our listing a condo here on the Intercoastal. And the first thing I want to talk about with Mary is, hey, what's going on with the interest rates? Where are we at? Where are we going? So what do you normally, I mean, I'm sure you, because you do this every day.
Yes.
How do you respond to something like that?
So, you know, interestingly, when the day the Fed cuts rates, our mortgage rates, 30-year fixed, go up.
They bounce up a little bit.
Yeah, we just bounced up almost a quarter overnight. But
so what is the rate?
So today, the average is about 6.25, 6.3. Yeah.
Okay.
So really, you know, what is really more important? Are you looking at the rate, or are you looking at the payment? Because the difference in the rate is, you know, between 6 1/8 and 6.3 is $20, $30, $40, $100 depending on your loan amount.
Sure, how much the amount, yeah.
So really the things that you know, really what I try to encourage people to look at is, what is your total payment? Mm-hmm. Not what rate you're going to get, but what is your total payment? And when you're looking at single families, you know, what's really going to drive up that payment? It's not necessarily that rate.
Yeah.
Because you take a rate and you divide it in a payment and you divide it over 360 months.
Yeah.
But you look at property taxes, you look at your insurance, and those are the things that really drive up the payments. You know, we're in a market where we've been under 6.4 now for a couple of months.
Yeah.
For us as lenders, you know, I don't necessarily, you know, right when the Fed cuts the rates, I always lock my loans in 3 or 4 days before.
Sure.
That's that sweet spot to lock them in before, because it's all depending on what he says. Now, the next things that we look at are what's happening in the markets, job market, CPI, price inflation, right? So if you hear high inflation, maybe that means rates are going to go up.
Sure. So when I look at the graphs, I kind of look at the historical things on interest rates, you know, year to 3 years. And previously I had looked at it and said, you know, last year at this time in October, the interest rates had gotten up to close to 7%.
Yeah.
That sound about right?
Yeah, right before October.
And then there was a nice precipitous drop after that for a good 6 months.
Yep.
Ish. I don't have them in front of me.
Ish.
So now they've creeped up. Now they're coming back down. So I was kind of thinking and hoping that, because sentiment is always a big driver of purchasing and kind of getting some momentum going. So now that we're getting October again, is it similar where we're starting to see rates go down?
Yeah.
And do you think, we won't hold you to this, but you think that will continue for the balance of the year?
We sure hope so.
Yeah.
We sure hope so. I think now is a perfect time for buyer's market.
Yeah.
Because our rates have not dropped to that 5% range yet.
Yeah.
So for buyers, the sellers, you know, we still have some inventory, and we have inventory with sellers where they're willing to pay concessions, maybe buy down that rate so that buyer can get in the 5s, right?
Yeah.
Buy downs are a big thing.
So that's important. Talk about the buy down strategy.
Right. So
we do recommend that to our buyers, but not a lot of people know about that. But it's a really great way to knock your rate down and actually save more money than getting a credit towards closing costs.
Right. So for all conventional FHA, VA loans, a seller can offer a buy down, so they can do a 3-2-1 buy down.
Okay.
So if I quote the rate at 6.25, and the seller gives a 3-point rate buy down on the contract, then that means that buyer is going to have 3.25 the first year on their interest rate, 4.25 on their second year.
Wow.
5.25 on their third year.
Oh wow.
And then after that, it turns into a regularly amortized at 6.25.
So that's really something special to understand when you're shopping for a home, condo, single family home, townhouse. talk to your lender first, Supreme Lending especially, about those types of products that can make it much more affordable to get you in the home. And maybe save some money and spend some money on upgrades or not, or just put it back into the house.
Right. Negotiate that buy down, not necessarily lower purchase price.
Talk to your lender, talk to your agent about that in advance for a strategy when you go in and look at these homes. It's important that when you go looking at homes, you've already done that work.
Yep.
I've seen it happen a lot where people don't do that. They find a place they love, and then they're scrambling to try and figure out how to get the lending done, and the house gets sold to somebody else. So
right. It's very important to know the total picture of the house, right?
Yeah.
I always ask buyers, send me something you're looking at.
Yeah.
And then I can tell you, okay, what you're looking at, that purchase price range, here's your projected payment.
Yeah.
And then they can go from there. Because we all know that with taxes and insurance, that's going to drive that payment up or down. But with the proper concessions, you can ease yourself into those payments. As if you're in a job and you're going to get raises and bonuses and commissions, then you're going to start out at that lower rate, and then you'll know that in 12 months it'll go up a little bit, another 12 months will go up a little bit more.
Great. Well, thanks, Mary.
You're
so
welcome.
Just know with Supreme and us here at Williams Group, there's things we can do in advance to make it a lot more incentivizing to get into the home of your dreams.
Now is the time, because when we see those rates dropping into the 5%, it's going to flood the market with buyers. It's going to become a seller's market again. Right. I like this market much better, don't you?
Yeah, well, any market. I like any market. There's always transactions. We just have to adjust based on the market.
I like when the buyers get incentives.
Yeah, I do
that.
too.
I like that.
That's fun to do that.
Yeah.
So, hey, enjoy your day. If you're going to go to the boat show, have a lot of fun. Beautiful weather this week.